What's up, my fellow harmonic traders? Welcome back to Track the Harmonic, your go-to destination for all things harmonic technical analysis. I'm your host, Lord MC. In today's video, we're diving deep into harmonic technical analysis to spot some key setups. We're also going to be taking a close look at some crucial data coming out next week that could move the markets in retail sales, building permits, and earnings reports. So first up this week, we have retail sales. This tells us how much consumers are spending. This will give us a pulse on the overall economy, while buildings permits shows us the health of the real estate market by indicating future construction activity. And of course, we do have earnings reports. This is going to let us know how companies are performing and whether they're missing Wall Street expectations. Last week, we did start the earnings season with banks who did report some good earnings, so we're going to see if there's continuation into tech sector, because we do have some of the big blue chips reporting this week with TSM as well as Netflix, and TSM is one to look for this week to see if the semiconductors continue pushing after a bullish close last week. So make sure to stick around for all the insights, and if you find this video valuable, don't forget to comment, like, and hit that subscribe button for future videos. Having said that, I also want to preface by saying I'm not a financial advisor. None of the things I say in my videos or anywhere else is ever financial advice, so question everything, do your own research, and come out with your own conclusions. Having said that, let's jump right into those charts. Jumping right into SPY here, so SPY had a bullish breakout at the end of the week, with Monday being a high volume selling, and then you had low volume on Tuesday, Wednesday in anticipation for CPI on Thursday. You did start to move a little bit to the upside on Wednesday in anticipation of CPI, with the banks leading the way, which kind of made sense, especially after they reported good earnings. So what can we expect here harmonically for SPY? You did generate an ABCD pattern here. This is a bearish harmonic where you did close above ABCD there. That target is at 578.88, and you close on Friday at 579.58, with the high being 580.33. So let me bring up my drawings here. So I do have a level of resistance here. That's a 580.09. That is a fib retracement from previous swing high to swing low, and above breaking this level here, if you do manage to break above that resistance level, then the next thing I'd be looking at would be hop there at 584.41. We do have the black swan in play here. Prior to this ABCD pattern forming, you did have this bullish black swan, which looks like it's heading towards that PT3 at 599.08 down the line. So if you don't find any resistance here, that would be a more macro level I'd be looking down the line, maybe towards the end of the year, to that psychological 600 level if the market continues pushing upwards. Right now, on Thursday and Friday, you did have some high volume buying there compared to earlier in the week on Tuesday and Wednesday. So harmonically here, it depends on the resistance level. If you want to go and lose the ABCD 575.88 here to look for a potential retracement back down for a type 1 reaction, where the ABCD pattern is calling for a reversal down to T1 at 547.85. So right now it's not clear yet that it wants to do that, but we're going to see if hop is going to go first for the type 2 return, and then you come for the type 1 reaction. If we go over to the weekly here, you can see there is another pattern here. If I take off the ABCD pattern, we do have a pattern here. I believe it's the deep crab, bearish deep crab, which is calling hop at 618.44. So now you have 1, 2, 3, 4, 5. Actually, you can see it. It's 6 candle closes above XA, which means there is a likelihood that this goes more macro. This is obviously on the weekly chart towards that 618.44 harmonically down the line. So I'm going to keep a close eye on that. Let me bring up my oscillators here. So looking at the HSI here, the HSI did cross the midline here on Wednesday towards the end of the week there. So if there is more continuation to the upside, would think that you would potentially go to that hop at 584 before you reach the overbought conditions, and you'd be looking for a retracement back down. But if we look more I guess less macro here on the 4 hour, you do have ABCD patterns popping up on more of the macro 1 to 4 hour time frames there, where you are indicating a potential reversal here. So you still have a potential push up there on the 4 hour at hop at 581 before you find some resistance. You did generate an HSI dot here, where you're looking at the HSI to potentially cross that midline. If you can see it cross that midline, then maybe you could see a potential retracement for a type 1 reaction at 572.97, where you could find support there and then continue back up to make a higher high. If we're looking at the weekly here, the weekly did have low volume, decrease in volume compared to last week, and like I said, there is a pattern, the deep crab, which goes and extends itself to the $618 target, which is down the line in my opinion. I don't think it's going to happen anytime soon, as this is on the weekly time frame. So levels to look to the upside again would be on the daily would be 584.41. If you do find resistance at this 580, 581 level, then I'd be looking for a retracement towards 472 on the 4-hour harmonic there. So having said that, that's all pretty much on the SPY here. We're going to see if there's continuation next week. Should be huge with earnings reports. So one thing to be looking at here especially would be the semiconductors, because the semiconductors started to push to the upside last week. So we're going to see if there's continuation, especially with TSM reporting next week. So definitely keep a close eye on the SPY. Jumping over to the triple Qs here. So the triple Qs closed on Friday at 493.36. You do have a bullish black swan on the daily calling for PT3 at $553 down the line. We still have to see if that is the next level it's going to, and we are trying to figure out if there is some resistance around these levels. So we did have a strong push in the tech sector, specifically with the semiconductors. So TSM does report this week, so we're going to see if there's more continuation. If there's more continuation, I do see a potential test of the previous all-time highs at 504.16. If we go over to the weekly here, you can see that on the weekly it was on decreasing volume, and you do have a level to the upside there at 498.04 off of this ABCD pattern here. This is a bearish ABCD pattern. It looks like it wants to head up there. You are also potentially forming a W formation. That in harmonics is a bearish pattern potentially forming, so you could see a bearish reversal to the downside. So the next levels, if you do break up above ABC there at 498.04, would be hop at 529.73. Obviously that would create a new all-time high, and this is on the weekly time frame, which could take a few months to play out. So if you do find resistance at ABCD, the next level I'd be looking at would be the retest of the 90 EMA on the weekly, which would be around 480, 481. If we go on the daily, there is a new feature with the HSI dots that just came out over this weekend. So if you do have HPC and you're interested in harmonic patterns, I definitely recommend going over to Scott Carney's website and looking at the HPC indicators. So there was a new feature here where it's telling you this is a retest of the HSI dot. So we do have 3 candles here that is finding resistance at this HSI dot retest line, which is going back to this HSI dot. So what can we expect here harmonically? If you do find resistance here, the next level I'd be looking at for a retest would be where the previous HSI dot generated here. So you can see that the triple Qs went to 485.80, and then the HSI error actually came down to 485.56. So that's maybe where you can head down to, and if you do lose that level, I'd be looking at for the retest of the 21 EMA. So every time the triple Qs comes up here, more recently where it creates a higher high, then you come down for a higher low to retest at 21 EMA. So that's roughly around 483 and change. Below that, then you have the 50 EMA there at 477, and then PT2 at 472.93, where you have we're slightly above the 50 SMA. Below that, then you have an HSI dot retest line here on around 467. So this is coming back to retest this HSI dot here. So you have some levels here. If you do find resistance, you could be potentially trading in this range here. You will have in range until the next maybe earnings comes out, maybe TSM pushes and has good earnings, and you can see upwards movement towards 504.16 and then towards PT3. So again, we'll go to the weekly here. The weekly, you do have resistance there at 498. No HSI retest line. The only one that you do have is all the way down here at 445, but we are a bit far away from that. So definitely keep a close eye out on the triple Qs. Jumping over to the Dow Jones here. So the Dow Jones looks extremely bullish in my opinion here. It closed the day on Friday at 428.73 before finding the highs at 429.07. You do have a bearish crab pattern here where you can see that hop was a level of resistance. It actually started trading around that area for 14 days, and you finally broke out of this on Wednesday and continuation into Friday. So in my opinion, compared to the SPY and the triple Qs here, the Dow Jones does support the move and that breakout, whereas the SPY specifically has lower volume. So we'll see if there's continuation there, but at least for the Dow Jones, you are breaking out here to potentially test even new all-time highs. So what are those levels to the upside for the Dow Jones? If there's more continuation, I do have a fib retracement that's calling for 435.52. The HSI did cross that midline, so that's where I would expect you find some resistance or continue pushing higher. The MACD also started to flip green on Friday. And if we go over to the weekly, you do have a bearish ABCD pattern where you can see that it's now 2 candle closes on the weekly chart here above hop at 422.67, which could mean more continuation to the upside as you are breaking and invalidating this ABCD pattern. So the HSI has more room to the upside there before it reaches the overbought conditions on the HSI extreme zones there. You do have a bearish divergence on the weekly, but this can get invalidated if it continues pushing higher, because in my opinion, the Dow Jones does look a bit strong here. In the event that it finds some resistance here, because you are in uncharted territory, the next level I would be looking back is HOP, right? You want to see if you can hold above HOP. You did have a breakout above HOP on Wednesday, and you came down for a retest off low volume towards HOP and found support. So that false breakout, which could have been a false breakout, actually was a confirmed breakout, because you did come and retest HOP and then you pushed with even higher volume. So who knows if this is actually can come back down to HOP, because you did retest it and ultimately cannot even come close below. But you could revisit it again. So if you do lose HOP there at 422, the next level I do have is 420.72, and then XA at 413.72, where you do have that HSI dot retest line as well. So definitely keep a close eye out on the Dow Jones. Jumping over to IWM here. So IWM had a bullish breakout here. Obviously from Wednesday to Thursday, you started to pick up some volume. It was quite significant to see that this is actually trying to break out. You do have a potential bull flag here. If you can see that this would be the flag, and this would be the flagpole, and this would actually be the flag. So right now you are maybe attempting to break out of that flag. You did have quite significant amount of selling here with very little buying, but on Wednesday to Thursday, you started to see some reversal candles there. Specifically on Thursday, you had that hammer candle off of high volume, and on Friday you had that big wide spread of a candle off of decreasing volume. So it's still a little bit of a potential trap. According to VPA here, that high wide spread candle compared to the previous hammer candle off of increasing volume is much wider. So we could meeting up here with some resistance level. So harmonically, what can we expect here? You do have quite a few patterns here, the bearish C crab as well as a bullish black swan. So the bearish C crab, you obviously completed the type 1 reaction and now are attempting to go for the type 2 return. Level of resistance that I'd be looking at would be XA at 224.57. You do have a retest, an HSI dot retest line at 223. If you could tell, when the pattern was created, IWM has tried to attempt to break 224, but every time it gets up there, it finds resistance and you come back down. So we are approaching those levels again. The HSI did cross the midline on Friday, so if this continues to the overbought conditions, you can maybe see this go towards HOP at 233.44 down the line. I definitely watch for that XA though. Every time it comes up there, you had about maybe more than 10 attempts up here, and every time you come up there, you always get rejected. So watch out for the level. If you break above 224, then we can see 233. If you do find resistance here, the next level I'd be looking back down would be the 216.43. And as I bring up my levels here, you also have a gap to fill should you lose a 50 EMA. Come back to T1 at 213.16, right where their gap fills around 212 and 77 cents, around there. Below that, then you have 208.90, and then the 200 EMA would be at 206. If we go over to the weekly chart real quick, you also have a bearish white swan with a hammer candle, which you could argue was on a downtrend, which means it could be a reversal back up for a type 2 return to hopefully OPR down the line. If you see the next targets here to the upside would be CD first, 228.63, and then OPR. Should you find resistance here, next level I would be looking down towards PT1 at 214.39, and like I said, you can have that gap fill, which is closely where the 21 EMA is on the weekly. Below that, then you have PT2 there at 205.58, where you also see a HSI dot retest line there as a level of support. The HSI did cross the midline as well on the weekly chart, so right now you could argue that IWM is picking up on some volume after a huge amount of selling here, which is, quite concerning here that the bears were not able to step down to bring this below the 50 EMA and specifically PT2 there, right? So you did have selling, but you didn't have follow through on the bearish scenario. So you could start picking up here on the bullish side as well. If volume starts to pick up, then maybe you could see a higher high. Right now you're looking at a potential upwards channel with the tops here creating higher high. This would be a higher high, and down here would be higher lows. So right now you might be attempting for a new higher high. So in my opinion, IWM and the Dow Jones are starting to pick up on the bullish case scenario, so definitely keep a close eye on IWM. Jumping over to XLF here, so XLF on the daily did have this bearish crab pattern where it was trading above HOP, and It did break out here to a new all-time high as the bank started to push early in the week, and then they continued to push on Friday with Chase and I believe Wells Fargo reporting good earnings. So that volume is super high there on XLF. So what can we expect here? Harmonically, you did have that HSI dot retest line where you did find resistance there, but ultimately ended up breaking above it. So what can we expect here harmonically? If we go over to the weekly, you also have this bearish shark pattern where you did find support above the midline and are now pushing much higher. So I'd like to take my previous fib retracements from previous all-time highs to where you had a big retracement here. So if we're looking at here, you can see that the 1272 was at $45. So the next level I would be looking at here would be 49.18 for the financial sector here, the ATF, if there's more continuation to the upside. If we go over to the daily here really quick, let me remove this here. If we go over to the daily, the HSI did cross the midline, so there could be a scenario here where the banks and the financial sector specifically just continue pushing to the upside. In the event that it doesn't and you find some resistance here in uncharted territory, the next level I'd be looking at would be at that $45.50, then $45, and then we could look at targets to the downside here because you do have a gap all the way down here to fill at 43.11, but that could take some time to play out. So definitely keep a close eye out on XLF. Jumping over to XLE here, so the energy sector did have a bullish week, and then you have some resistance here at the end of the week. Obviously after a push up here, you did come down on Tuesday, ultimately finding some support around the T1 and finally closing on Friday at $92 and change. So we do have a bearish shark pattern here where it's looking like it wants to come to test that terminal bar at 94.51, but it is currently finding some resistance here at this previous HSI dot retest line. You did get very close to that terminal bar. If you can get to that terminal bar, then you go for the type 2 return towards hop at 97.28. Right now the HSI is just slightly at the midline. So if it finds support and it starts to curl up back up again to the overbought conditions, in my opinion, this goes towards that type 2 return to hop there at 97.28. If you do find resistance here and you cross with volume to the downside on the HSI midline, then you can come back to T1 around $91, and then where you have support between $88 and $90. So you do have a golden cross, where the EMAs did cross on Wednesday, and you have the SMAs also approaching for their golden cross as well. Something to note here, just so we know that there could be a potential retracement here. There is a possibility where this is also forming an M formation, right? This would be a double top and an M formation. Harmonics, as we know, this would be a bullish harmonic reversal to the upside if it does come to create that lower leg at point D. So it's obviously too early to tell. The volume is still, in my opinion, supports the move to the upside as there was good amounts of buying pressure. So if we do break above here, we do have targets to the upside, and if we do break down, then we're looking at 91 and then towards 88. So right now there is a lot of talk in the Middle East with geopolitical issues between Iran and Israel. So we're going to see if there's more continuation of that next week. If you take a fair retracement here from this previous swing high to swing low on the weekly, you could see that it is slightly just below or at the 618 here, 92.83. So in my opinion, you are threatening here to shift momentum bullish on XLE, which could be some concerns that we are going to potentially see crude oil back above towards that $80 target as well. So definitely keep a close eye out on the energy sector. We do have some fears that the VIX is also hovering around high 20s, and you do have the bonds also that went above 4% both for the 2-year and the 10-year. So there may be some uncertainty lingering around in the market. So definitely keep a close eye out on the energy sector. Jumping over to Apple here. So Apple on the daily currently has this bearish dragon pattern where you do have a bit of resistance line there at that BC target at the 886 from the dragon at 230.75. And now after the new HPC update here for the HSI dots and arrows indicator, you do have an HSI dot retest line around the same target at 230. So what can we expect here harmonically for Apple? If you do find a bit of resistance here at that $230 mark, then the next level I would be looking at here would be the retest of the 21 EMA there on 226, and then the 50 EMA here. So below that, then you do have a potential for this to come much lower. The HSI is hovering just slightly above the HSI midline, which looks like it's starting to curl back down. And if you do cross that midline, to the downside and it plans to reach the oversold conditions here all the way down here, then maybe that comes down towards the gap fill there where you do have it at 216 and change. Below that, then obviously you come down to the 1.272 of the pattern at CD at 208.71, and then below that, then you have the type 1 reaction to PT1 at 196. In the event that you break up above around that BC target there at 230, then you could be looking for a retest of the 233 target, and then OPR at 238.09, and then ultimately seeing a new all-time high at 242.22. So one thing to note here though, Apple, if you can see here, if you actually track VPA, which is volume to price analysis, you start seeing a little bit of a suspicion here whether this is actually going to break out or not. And by that I mean, if you look at this candle here, which looks like a widespread candle, that widespread candle was huge amounts of buying, right? 33 million volume, that's a wider spread. But if you go back, you kind of look at Monday's volume, which was 39 million, and the spread is much smaller. So in my opinion, at least the way I read VPA, that looks potentially like a trap, a bull trap in my opinion. You also can look at Thursday and Friday's volume. So Thursday you could call this like a doji candle, and then on Friday this was an engulfing candle. You engulf the body of the candle off of increasing volume, which could indicate that more downside is coming, or at least a retracement down here, because you did engulf the previous close off of high volume. So it just gives more confluence to that potential downturn here. So how deep that retracement, who knows yet. You could take a small fib retracement here from the lows of this week here to the high there. You can see that you can come down to the 50% retracement, will be 225 to 618, slightly below 21 EMA. 21 EMA, which would be at 224.65. Below that, that obviously switch the momentum back bullish, and you had the 786 there at 223, which gives confluence to that 50 EMA. So right now the volume, you know, in my opinion, there is more bearish volume than there is bullish volume. There's any attempts here, like I said, if you look at these 2 days here, it was off of increase in volume compared to the support that I tried to get here was off decrease, and this was increasing volume to the downside. And then you had this push up here, which was nowhere near close of the highest volume to the downside here, right? So you did have 3 days, which was more than these 2 days here, but ultimately you couldn't continue pushing. If it was going to continue pushing and breaking above this, and you wanted to see with high volume to the upside, and ultimately on Friday you were not able to do that, which gave you that engulfing candle. So we might be just in a range here for Apple at this 230 range, and then now potentially this range here, so around 222. If you'd lose that level, then I do think you start the type 1 reaction down the line. If we go over to the weekly, you do have another HSI dot retest line where you are not able to break above it. Every time you come above these levels, you create wicks and you come back down. Low point here was being at 213, so we're going to see if Apple is finally going to break above this. So I'd be looking above, like I said, 230.75 break above BC, then you could start looking to the upside for Apple. So definitely keep a close eye, because we do have semiconductors reporting on Thursday, I believe. TSM reports on Thursday and Wednesday, so we're going to see if that brings down tech in general. So definitely keep a close eye on Apple. Jumping over to Microsoft here. So Microsoft on the daily currently has this bullish dragon pattern. At the completion of the pattern, it was trying to go for an attempt towards T1, but ultimately it is finding resistance and breaking above CD there at 1.272 of the dragon pattern at 433.86. You also generated an HSI arrow and dot here, 2 dots. You finding resistance, and is now forming that HSI dot retest line where you did find resistance and huge amounts of selling pressure came in and ultimately brought down Microsoft towards that 200 EMA. And then at for the rest of the week here, you did have some amount of buying pressure, but ultimately is still finding resistance at a break above the 200 SMA on the daily. So what's interesting here about Microsoft here, you also have a potential inverse cup and handle here where you are forming the part of the handle right now, and if it does play out and break out for this inverse cup and handle, you could see downward targets for that breakout. So what would those targets be to the downside? The next level would be looking at would be the 200 EMA retest there at 409.24. Then you do have T2 there at 399.45, which gives some confluence there to that HSI dot retest around 397. Below that, then you start your type 2 return of the dragon pattern at BC there at 390, and then OPR at 374. You did cross the HSI midline at the end of the week there, but ultimately still finding resistance. The volume did decrease from Tuesday into Thursday. So for a pattern formation on the part where you are going to break out. In this case, for this inverse up and handle, the handle should be off of decreasing volume. It shouldn't be high amounts of volume because that could mean something else is going on there. But in my opinion here, if this is going to form or potentially break out, you want to see, at least on the selling pressure, have huge amounts of selling pressure and volume coming in to potentially have that breakout, right? That breakout, you could see a target from the cup here towards where that bull is, and if this is the handle part where it just find resistance there, then you could see it come down towards that 386.73 area. So definitely keep a close eye out on Microsoft here, because it's kind of interesting to see that Microsoft here is not moving like most of the other blue chips that are also pushing right now to the upside, but Microsoft finding a bit of resistance here. If we go over to the weekly, you can see that it closed on a doji candle just slightly above this HSI dot retest line at 414 area, where you do have another HSI dot retest line around that $430 target. So if we go over to the daily, what are you looking for targets to the upside? If this HSI midline is crossing to be bullish, then the next level you definitely want to close above would be the 200 SMA. They're roughly where you do have a potential death cross approaching. Right now it hasn't crossed, at least not on my lines. As you can see that there's a little gap there, but the 50 SMA is a yellow line and the 200 SMA is the red line. So there is a potential death cross forming on Microsoft. So if that plays out to the downside, then like I said, you have targets there. But if you have some support here and you're able to close and invalidate that death cross, you want to close above 418. And then ultimately there's a huge amounts of resistance here with all the EMAs kind of bunched up together. So a break above 422 could maybe definitely send it towards that CD target there at 433.87. If you take the swing, most recent swing high to swing low, you can see that right now the resistance is at the 382. So for this to be bullish back again to maybe create a higher high, maybe this is a channel that is starting to form. You created a higher high here, these are higher lows. So maybe this was the third high low, and then now you're looking for a higher high. But ultimately for that to happen, you need to break above the 618 here, which is at 429. Breaking above 429 obviously shifts this momentum back bullish, and you can start seeing targets to the upside for a potential higher high. But right now you do have a bit of few indecision candles here, so definitely keep a close eye on Microsoft. Jumping over to Amazon here. So Amazon on the daily currently has this bullish shark pattern. So what can we expect harmonically for Amazon? So on Friday it did generate, on Monday it did generate an HSI arrow to the upside, which was indicating that a potential reversal was incoming. And ultimately until the end of the week here, you did close higher than the previous candle they closed, and on Friday you pushed out to 189.93, almost at 190 target, but closed at 188.82. I do have a level of resistance there on 188.65. So if you do manage to continue pushing to the upside here, the next level I would be looking at would be T2 there at 195.55, where you did generate an HSI arrow at those targets. If you break above that, then I would like to see a break above 201.20, which was the previous all-time high retest. So we're going to see if there's more continuation for Amazon right now. The HSI the HSI arrow does see that it wants to continue pushing towards that overbought conditions, and that could be towards that T2 there again at 195.55. And if you do find resistance there, ultimately what that creates is a double top here. You do have an M formation, and like I said before, an M formation harmonics could mean that a bullish pattern is forming. So you would still need to come back to create that lower leg D, and if it does, then you would expect a reversal back up. So there could be a double top situation there. Obviously that it would be a potential pattern that could be forming, but ultimately it's not formed yet. To the downside, if you do find resistance here, the next level I would be looking at would be where the 9 and the 21 EMA around 184.44. Below that, then you have some support there at the 50 and the 200 SMA between 179 and 177, ultimately very close to the target one there at 176.41. Below that, then you had the 200 EMA at 174, and losing that level, in my opinion, could start a deeper retracement all the way down to the terminal bar at 151.61. So right now the volume is a little bit suspect here on Amazon because it is low volume. I know it's just average volume for this week, but it's still relatively low to the amounts of selling pressure you got here and the amounts of buying pressure you got here. If we go over to the weekly, you can see that the weekly volume also decreased compared to the two previous weekly closes, right, which was off high volume, and that was selling pressure. So you are finding resistance there at that terminal bar of this is the shark pattern on the weekly. So that terminal bar so far is resistance. So if you do find resistance there, and you have the 886 of that pattern, which is calling it a 175.95, ultimately where there is that HSI dot retest line. So below that, then obviously you can go towards a 50, like I said, 171, and a much deeper retracement for a double bottom at 150, kind of very close to the 200 SMA on the weekly. A break above the terminal bar on the weekly pattern could send it towards that top level at 203.04, which would be a new all-time high for Amazon. So definitely keep a close eye out on Amazon. Jumping over to Tesla here. So Tesla on the daily currently has this bearish bat pattern. This pattern formed back in September 26th. A few days after, you did generate this hanging man on the daily, which was off of increased in volume compared to the bullish closes prior to that hanging man. So that hanging man did give you that indication that a reversal was incoming, also that XA resistance. And if I bring on my levels here as well, I had a target there at 258.89, which I mentioned before, that if break above this with volume could be very bullish, where you could maybe see Tesla go up to that 290 area, maybe even the 300 level. But because you did find resistance here, it put you back below that range to 223. And obviously that hanging man into the week, you had bearish sentiment there into Thursday, where you did complete the type 1 reaction of 231.29, and then they had their event at the end of the day. Ultimately on Friday it did drop. I think I saw it as low as 12%. It went as low as $214 and change, and then closed at 217.80. And in my opinion, why that drop was significant here was, I think Wall Street was expecting more numbers, maybe more production numbers in their flagship cars. Obviously the event was more for robo-taxi, but they displayed, the robo-taxi, their robo-van, Optimus, which is more for the future, right? Not so much what's going to happen short term. So obviously Tesla's still far away from having robo-taxi being a thing. So I think that's why, in my opinion, the market reacted a bit bearish to this. So what can we expect here harmonically? The next level for Tesla to the downside would be a test of target 2 to 212.46. So that would be a close below the 200 EMA, and below that you do have the 200 SMA at 202. You have some bit of support there at 207.33 harmonically there, and then ultimately losing the 200 SMA, you can come back to target 2 at 189.30, and then back down to 177. So I do have a more major range here that Tesla likes to be in when it loses 223. So that 223, that's between 223 and 174. As you can tell, you can go all the way back here. It likes to trade in this range, right? You come up here, you come back up, test a new high. You came back down here to test that range again. And as you can see, anytime you break 223, you come down to the 170s and trade in that range. So right now you're back in this level again. If it doesn't find support quickly about 223, then maybe we could start seeing again towards the middle targets of the $200 range, the psychological level, and ultimately maybe even lower. If it does find support here, you want to see high amounts of buying pressure come in with high amounts of volume. You do have the HSI approaching the oversold conditions here, so you could form a potential HSI arrow down the line, but you definitely want to see a reversal candle with high volume to signal that a reversal or a strong reversal is incoming. The moment it goes above 223, then you'll be looking at for this to close that gap, which is at 231.29, and then break above that. Then you can start seeing a break above 240s, and then back again to 258 to 260. So right now on the weekly, it did generate an HSI dot, which is doing a previous check back of the HSI arrow there. You do have an HSI dot retest line there all the way down here to 186. So it is looking like an M formation as well. The 200 EMA support would be on the 200 on the weekly at 201.05. So it did close below the 21 EMA, and that is still on average selling. You are approaching that HSI midline. So that HSI midline would be around maybe around the 50 SMA. There's 200 EMA, so between 201 and 207. The 207 does have some confluence of support there from the previous harmonic target there, where you did kind of have some support here back in August around that 207 range. So we'll see if Tesla has more downside to come based off that HSI dot. Like I said, on the weekly, you'd be looking towards that 201 target. If it finds support above here, then you want to break above 223 to get bullish again for Tesla. So definitely keep a close eye on Tesla. Jumping over to Google here. So Google on the daily currently has this bullish white swan. So what can we expect here harmonically? So you can see here that Google started to pick up to the downside on some volume. We had huge amounts of selling pressure on Wednesday, and then on Friday you did have an increase in volume. So what can we expect here? If their volume starts to increase to the upside, the HSI was looking on the daily starting to curl back up. So next level I'd be looking to the upside for Google would be that HSI dot retest line, which would match up with where the HSI midline is at. So that's around $166. Above that, then you have the next HSI dot retest, which would be 170, which would be breaking point C there, and then you could ultimately look for that PT3 at 180, 188. My opinion, a break above the CD level there, you start be looking a more macro from the recent swing all-time highs to the swing lows. That would be above a break above C would definitely change the momentum. Potentially bullish, I believe, if you get up to the break C. That is a 50% retracement, so the 618 to get bullish on Google would be 174.93. If you do find resistance, because the volume has been picking up here lately, at least this week, started to pick up to the downside more so than the upside. If you find resistance here at that 50 EMA, then the next level I would be looking at would be PT2 there at 160.46, the 200 SMA there, and the 200 EMA is between 158 to 159. Below that, then you have PT1 at 155.54, and then losing that level, you would start the type 2 return to CD at 147, and then OPR at 141. So right now, if you take the swing retracement from the swing low to swing high here, you are seeing that you have a bit of support at the 382. So that's roughly around that 160 range. So if you lose that level, the 50% retracement would be 158, and the 618 would be around that 155, which gives confluence there for that PT1. So right now, huge level of resistance here in my opinion. You can see where most of the amount of selling came in between these two HSI dot retest lines, which is off of increase in volume. So I believe Google, if I'm not mistaken, but don't quote me, is in a bit of a, I think, lawsuit or something along those lines. So we'll see if Google continues here to the downside. If you go over to the weekly, you do have this bearish ABCD pattern where you are closing just slightly below the 9 EMA there off of increase in volume here. So you could argue your case here for this being an engulfing candle, that you did engulf the body of the candle, and that was off of increase in volume. So you do have also this bearish white swan where you did close just slightly above OPR there at 162.91. Below that, then you do have CD there at 153.78, just slightly below the 50 EMA. Below that, you have an HSI dot retest at 148.88. To complete the white swan, you would have to come back for the type 1 reaction if it does happen at 140.95. So the HSI not yet signaling that it wants to continue pushing up, and it also kind of looks like it wants to curl down, but we're going to start to see if this is going to pick up on the volume next week with some of the blue chips reporting. So definitely keep a close eye on Google. Jumping over to Meta here. So Meta on the daily has this bullish black swan, which almost completed the type 1 reaction at PT3, which was calling that level at 604.71, and it got very close on Monday with the high being at 602.95, which was calling that PT3 target all the way when this pattern formed since July. So it's getting very close here, but you're also finding a bit of resistance here for Meta there. As you can see, you generated 2 HSI dots. So what can we expect here harmonically for Meta? If this is signaling a reversal, the next level I want to see would be to come down to test 567 more macro. The HSI is approaching the oversold condition, so that would be a retest of the 21 EMA there, just slightly above that 567. If we go over here to the weekly, we can see that this is a low volume candle here on the weekly, but it's signaling maybe a reversal. If we want to see continuation to the downside, giving us maybe next week a retest of 577.71. Below that, then you obviously would start the white swan pattern, maybe a reversal back down towards C there at 542.81, where there is a gap to fill. If we look here on the daily here, the volume that it's been getting on the push down here, some of them have been on high volume, and then you have low volume, and you do have increase in buying pressure here as well, but then the volume is starting to slow down. So Meta, the next level, if it continues, and you can see that 604.71, it is being strong right now. That level to watch out would be 567. In my opinion, if Meta can come down to test that 567, and if it loses and you start a descent downwards, if we go over to the 2-day, I wanted to quickly share the HPC indicator. There is a pattern towards the 2-day time frame. As you can see that it did form, you did generate the HSI arrow, ultimately still closing above hot, but that is on low volume. I do think that volume, you still need one more day for that candle to close, but it's halfway through at 2-day volume. So the next level, you have an HSI dot that generated here. That retest line would be 578. Below that is 567, where the 13 EMA is at, and then you can start your descent towards that type 1 reaction to target 1, which is calling 515.17 down the line. Obviously this is on the 2-hour time frame, which could take a while to play out, but 2 levels to the upside if there is more continuation, because Friday you did have bullish breakout, not just in meta but just overall the market in general. You continue pushing higher. So the next level to the upside, I still want to see if it can go above PT3 at 604.71. Above that, then you're looking towards I believe higher targets towards 620. So definitely keep a close eye out on meta. Jumping over to Netflix here. So Netflix on the daily has this bearish dragon pattern. I did try to close above 2 days here above OPR at 725.07, but on Friday it managed to lose that level, and ultimately looks like it is potentially reversing here off of this dragon pattern. So what can we expect here harmonically for Netflix to the downside? The next level I would be looking at would be the 886 of the pattern of BC at 705.57. Below that, then you do have an HSI dot retest line, which is right where my $700.99 target line is at. Below that, then I do think you start the potential type 1 reaction towards CD at the 1.272 of the pattern at $643.27, where there's another HSI dot retest line there around 635. Below that, then you have the type 1 reaction in place towards PT1 at 587.04. So right now, obviously, huge week coming for Netflix since they do report earnings, and they've been on quite the run here. So we'll see if there is more continuation to the upside. It's interesting that Netflix is forming a dragon pattern here on the daily to see if this is actually going to play out or not. That's obviously going to be dependent on earnings. The HSI is crossing towards that midline, which means you could maybe be in this range between the high there and the $700.01 level here. So below that, bad earnings, you could potentially see these downwards targets, and a break above OPR with 725.07 could obviously send it to new all-time highs. I do have a target there at 765.75. If we go over to the weekly, you do have a bearish white swan, which is calling OPR there at 739.78. It's obviously an indecision candle on the weekly with increase in volume pressure. So obviously you can see this range here between 739 and 697. Maybe that's where it trades this week in anticipation of their earnings, which I believe they report on Thursday. Maybe you see it break out to the upside or to the downside depending on how well they report. So definitely keep a close eye out on Netflix. Jumping over to NVDA here. So NVIDIA did close a bit bullish for the week at 134.80. You did break above my line there at 132.66. Which ultimately is what I said. If you break above that with volume, you could definitely start seeing in the retest of the all-time highs at 140.76, and then a new target, a new fib would be at 144.71, which could create a new all-time high. So right now, obviously the semiconductors had a lot to do with this week's push, especially in the Nasdaq. You started to push up because Nvidia, AMD, TSM all started to push to the upside here. So if there's more continuation, those are the targets I see. In my opinion, I do think things start slowing down here in the tech, especially. I don't know that it will approach the all-time highs. It could. They don't report till November the 14th. So that's about another month for NVIDIA. So what can we expect if it loses 132.66? In my opinion, if you lose this level, you can come back to your range between 132 and then 120. You do have an HSI dot retest line there, which is around 121. And you did leave a gap slightly below that level at 119.53. The HSI, the amplified RSI, the RSI are all completely overbought here. You are looking for a potential reversal candle to the downside, so you want to see high selling there for that candle, and then you want to see also an HSI arrow that could signal that a potential reversal is incoming, similar to what you did over here, right? So the HSI and the amplified RSI were completely overbought. You generated an HSI arrow, which was an engulfing candle on pretty much 3 candle closes prior, right? And then you had high volume, so that indicated that a reversal was incoming, and what happened, you came down here. I'm not saying this is where it's going to go, but this is what you want to see for a reversal to the downside, especially after the oscillators are a bit overbought. You could see maybe a retracement. So how deep that retracement? We could take this swing low here most recently into where maybe it's still unclear whether this is the top there. The highs are at 135.78, but let's assume that's where the top is. The next level you'd be looking at here would be up to the zone here, which is the 50 and the 618. That's between 125 and 123. Lose that level, then obviously you shift the momentum back bearish, and you can start coming back down to that 120 area. If you only come down to the 382 or the 236, and that can be bullish, and you can start maybe consolidating there, waiting for another pattern formation to form, and then ultimately waiting for a breakout into anticipation of earnings. So we're going to see if NVIDIA has more continuation to the upside. If we go over to the weekly here, you did have also a HSI dot retest line there around 132, which is where I also have my level there at 132.66 I had drawn before. So to the upside, obviously you have the, like I said, the all-time highs there, $140.76, and then 144. So below that you have resistance. You come back down to that range at 120.88. Want to go over really quick to the 4 hour, because the 4 hour can give us a bit of information of whether we're reversing here or where we're at least finding some resistance, if any. And you can see here, I know there's a bunch of things going on here, but we do have a deeper bat pattern here. This is a bearish bat pattern where you did generate this on Tuesday, and you are finding a bit resistance here off the confluence from the black swan bullish target there at PT3, which did generate here in on Wednesday, October the 2nd, and you completely went to that PT3. So in my opinion, you're a bit over exhausted. The RSI here has a bearish divergence, so it looks like it is coming down below the 70 RSI, and that bearish divergence might be playing out. So you want to come back down to XA, which is at 132.06. You do have quite a bit of indicators here, harmonic indicators popping for a reversal. You do have also an HSI retest line here. I know it's hard to tell, but there is a HSI dot retest line which was created because of these HSI arrows and dots. If you find resistance there, then you're looking back down towards 132, maybe that XA target there. Below that, then that's just slightly supported by the 21 EMA. Below that, then you have BC there at 126.87, which could start the move for the type 1 reaction, which is calling all the way down to 117.13. Now that is quite the retracement to lose. You start obviously looking a little bit bearish again, but it puts you in that range, the range that I said earlier on the daily, between 132 and 120. So the HSI did cross that midline. If it decides to go to the oversold conditions, I do think that's slightly below XA there, maybe around the 21 EMA, around 131 to 130. So definitely keep a close eye on NVIDIA. I do think there might be a sympathy play or might be a reaction. Depending on how well TSM reports earnings, you could start seeing maybe a retracement if TSM misses, or if TSM continues to push higher because of good earnings, then you might see the rest of the semiconductors also push. So definitely keep a close eye out on NVIDIA. Jumping over to Bitcoin here. So Bitcoin on the daily currently has no harmonic pattern. It has been struggling to break above the 200 SMA. It did have a very close breakout here on early Monday where it went as high as 64K, and then also a few attempts here over the end of the weekend into this video here where it is finding resistance at the 200 SMA. So every time it comes up here, it does find a bit of resistance and volume starts to pick up, and there's no follow through on the buy side. So when it gets a break above it, no follow through. The HSI did cross that midline, but like I said, the volume is not there. If we go over to the weekly, in my opinion, this looks more like a bull flag forming, and you still have yet to potentially break out of that pattern. So we are just waiting here for Bitcoin. Obviously, there's a lot of things going on here in crypto, where you just spin in this long range here, right? 69K, the highest there, and you come back down. So you're looks like you're in a range between like 54K, and then obviously that 69-70K level. So in the meantime, you are between the midline of those two targets there at that range. So if you want to break above and be bullish, you definitely have to break above the 200 SMA. Maybe you do have resistance there also around 65, 66K. Above that, then you could see 69. And we could start seeing towards our targets on the 2-day as well, where there's calling a BC target of the dragon pattern at the 886 of the pattern at 71.8K, and then OPR at 78.4. If you do fail this level here at 54,000, in my opinion, you're losing that very close to that CD at the 1.272 around 52K. Then you do start the reaction, the type 1 reaction towards PT1 at 38.5. So right now, obviously, this is too early to call for the PT1 retracement for that type 1 reaction. It's finding a bit of resistance maybe here at the HSI midline. It is approaching. We're going to see if it fails there. If it does fail, I do think maybe you come back down again to the low mid 50s again, find support, and just wait until you actually break out with some news. But right now, I think it's just consolidating. Maybe you are accumulating here. Who knows? Or you're about to redistribute. It's kind of a tricky spot that Bitcoin is in, so I definitely just watch out to see if you break above 69K, you can get bullish, and below 54 can get quite bearish. So definitely keep a close eye out on Bitcoin. Alright guys, just to summarize what I expect next week, I do think there are quite a few things I didn't mention earlier in part of the video, but I'm going to mention here now. That's kind of interesting here, and I'm going to cover really quick here what I expect for this coming week. So first I wanted to mention the VIX. Now it's very hard to do technical analysis on the VIX because a lot of things could take place because of geopolitical issues, you know, election talks, anything that can happen internally here in the U.S. or anything around the world can definitely shift the momentum, bullish and bearish, and volatility can come back in. So what is interesting here, at least to me, the way I'm seeing and when I've been tracking the contrarian indicators, anytime there is uncertainty, you start to see the VIX pop up. So the VIX did pop up towards 23, which ultimately puts it in above 24 to 25. It's considered a bear market territory according to the VIX. When every time it reaches those levels, you are in a bear market. And below 19, you are considered in, or at 1918, you are considered in a bullish market. So right now you're still hovering around 2045, which is kind of in the middle. You did, like I said, we get very close to that 24-25 target for the VIX there earlier in the week. And in my opinion, the way the market's been, or at least moved this week, with SPY continuing to make new all-time highs, the Dow making new all-time highs, the Nasdaq still quite a bit of ways there before it reaches its previous all-time highs and creates new all-time highs. And you had some other tickers as well, like some of the tech sectors pushing up, right? Some of the blue chips were pushing up while others weren't. So right now, I do think that if, in my opinion, if it was the market was bullish, continuation to the upside, then you would kind of see the VIX drop below that 1918 level, maybe push it back towards that 1415, and that it actually, you know, gives more confidence that there's, you know, there's no fear and uncertainty. But when you're hovering around the 20s, your ears should perk up a little bit. I could be wrong here in saying that this is nothing, and then finally you're just about to squeeze the bears out, because there's that scenario here. I do think the options contracts for the month of October here, specifically the October 18th, there's a lot of open interest, and it's specifically on NVDA. If you look at NVIDIA's option chain, is very high. So it could be an anticipation right now, obviously, for the first semiconductor that's going to report earnings this week, which is TSM. But right now, you do have, like I said, the contrarian indicators kind of elevated slightly, kind of suggesting maybe there's uncertainty in the markets. And obviously, when there's uncertainty in the market does not react well to that. You do have talks about the 25 to 50 basis point cuts for the next meeting, which is coming up on November the 7th, if I'm not mistaken. So we're trying to see if we're going to get 25 basis or 50 basis point cut. But like I said, the VIX is kind of elevated here in the 20s. You also have the bond market also rising up. So if we look here at the 2-year and the 10-year, the 2-year did go as high as 4.09, almost hitting that 4.1 on Thursday's high, and you did close on the 10-year here at 4.1. So in my opinion, the way I am looking at it, at least, is that the VIX is elevated in the 20s, and the bond market is also rising up here, which could mean that there is uncertainty back on the table, obviously, with a potential shift from the equities market back again into the safe haven of bond purchasing. So that could be due to a lot of things that are going on, geopolitical issues still with Iran and Israel. You do have the energy sector also pushing up because of that reason, right? You have crude oil. I believe I checked, it's around $76 to $77 a barrel, with the chance that it goes way above that. Some analysts are saying it can go way above 80. So that's the next level. Harmonically, I'm seeing, at least on crude oil, to test that $80 a barrel. So in which some analysts, like I've said, could say it can go much higher, towards 84, 90 even. So there are still talks there about the geopolitical issues in the Middle East, which could be seen as an indicator of that uncertainty. So these contrarian indicators are starting to light up again. Also, we don't know how much the Fed is going to cut rates. We do have the meeting, I think, if I'm not mistaken, November the 7th is when we're going to get the next rate cut, which we don't know if it's going to be 25. We'll see if Wall Street or the Fed monitoring tool is, I think, suggesting a 25 to 50 basis point cut, but we don't know how much of a cut. So there could be that that uncertainty back on the table, where the bonds are increasing again. Obviously, in order for you to get an inversion here for the 2-year and the 10-year, the yield inversion occurs when the 2-year Treasury yield exceeds the 10-year Treasury yield. This could reflect a scenario where the short-term borrowing costs are higher than the long-term borrowing costs, which is kind of seems like abnormal, right? It's weird to have that, but this could often suggest that there are underlying economic stress or potential future shifts in policy. And like I said, that could be due to a lot of factors. It could be geopolitical issues. It could be the rate cuts that are coming. We don't know how much or how aggressive the Fed will cut. So there is that uncertainty again. We also had some bearish data, at least in my opinion, that came out from CPI and the jobless claim numbers this week, right? So I'm going to go over those numbers as well. So CPI month over month for the month of September came in at 0.2. Previous was at 0.2, and the estimate was at 0.1. So that was seen as an increase. It means missed expectations as well. And the CPI year over year came in at, for the month of September, came in at 2.4. Previous was a 2.5. The estimate was at 2.3. So that was actually a beat there. It actually decreased, but it didn't meet the Wall Street's expectations. Nonetheless, it did decrease on a year-to-year basis, right, for regular CPI, which includes, food and energy, that volatile sector there. But when you go over to U.S. core CPI, which is what I believe is Fed's favorite metric to look at, because it excludes that food and energy, which could be very volatile. So for the month of September, U.S. core CPI came in at 0.3 versus 0.03 previous. The estimate was 0.2. So Wall Street was expecting that to drop and then stayed flat. So that was for the month of September, month over month from August to September, stayed flat. You kind of wanted to see that actually come down to suggest that inflation is still coming down, but it's actually now staying flat for the month of August towards September. From July to August. So now the U.S. core CPI year over year for September came in at 3.3. This time last year it was at 3.2, and the estimate was 3.2. So Wall Street was expecting a decrease of 0.1 for year over year for U.S. core CPI, and it actually increased. So are we starting to see signs again of inflation maybe coming back up again? Did the Fed cut rates too aggressively too soon with that 50 basis point cuts? Obviously, that is still too early to tell. We won't see the effects of that maybe a year from now. So we don't know. But there is that potential uncertainty, and that is why, in my opinion at least, I think the VIX is elevated towards that 20, and there is some purchasing of bonds here. So that's just my opinion. And just pay attention to when those indicators start to light up, because it could potentially start seeing that maybe there could be a shift from the equities market to bond buying, and you could see a potential retracement in the market. So obviously, could be too early to tell. It could be nothing. We're going to have to be dependent on data. So that's what I wanted to share here at the last part of the video. So that's it for me, guys. I will be streaming same time as always, back on schedule from Monday to Friday from market open to market close. So if you're interested in catching the stream, I do stream over on Twitch, so link to my Twitch is in the description box below. Having said that, guys, that's all I have for you. I hope you guys have a good weekend, and I will see you guys on Monday. Take care, everybody, and peace.